Hey everybody, it's Eric. Today is Monday, June 12th, 2017. I'm going to take a look at a trade in the NASDAQ. I'm also going to be showing you an options backtester that shows sort of the performance of this trade going back a few years. But let's take a quick look at just the market in general. Obviously, Friday we had the big tech sell-off, and the Nasdaq, really kind of took a plunge, and then, sort of came into, what would be a sort of support area as it sort of broke out around the 139, 140, and it's kind of just hovering here, a little bit of a bottoming tail, and a lot of this is on the back of Apple getting downgraded. And let me just kind of be clear about the downgrade. The downgrade was not that they put a sell rating on it. It was basically downgraded from a buy to a hold. And whatever the analyst said that they think it would top out around 150. At the time, it was trading for 155. So kind of, I think we're going to find some equilibrium here in the 145, 150 area. And I think we probably chop around if it doesn't bleed into the other markets. And part of the reason I don't think the whole market's going down is because the same time that Apple and these stocks were going down last week, financials actually rallied. So to me, I was sort of just seeing a rotation, if you will, people taking profits. It's very common to take profits on your winners and rotate them into things that have been underperforming. And we also had, if we look at the dollar UUP, there was a little spike in that on Friday as well, which also helps financials. So when we look at the big tech stocks, and that's kind of the news we're seeing, it happened all over the place. We got Google kind of came back down to where it had previously broken out. If we take a look at Amazon, similar chart. So for me, the best way to trade this sort of the tech sell-off is by just going to the NASDAQ and looking to sell put credit spreads. And, we're going to talk a little bit about the levels here. I want to go into an options backtester I've been using. And in the link of this, in the description of this video, I'm going to put a link where you can get more information on this if you want to try it out yourself. There's some videos and things about it, but I'm going to go through and we're just going to look at the NASDAQ. And I'm going to go to a 3-year back test. And you can see there's a lot of different strategies here that you can put in here. 30 days means we're going to use the monthly options. So let's go ahead and we're going to put in the ticker. We're going to look at put spreads, and we're going to be looking at selling put spreads. And since it's an index, we're not really going to deal with any of the earnings. And I've already preloaded the deltas that I like to buy. And while that's loading, let me flip back to the chart. Let's go to the option chain, and I'm looking at the July options. And I know there's 39 days left, but for me, I really like, typically when I sell spreads on the NASDAQ, I look at, or on QQQ, I look at 2 or 3 strikes wide. So if we look at the deltas here, if we look at, let's say, the 135, and if we go down 1, 2, 3 strikes, the 135 is at a 28, and 1, 2, 3 strikes is about a 16 to 19 area. So there's about a 10-point spread in the deltas when you go 3 strikes. So when I go back to the options backtester, that's what I've put in here: 40, selling a 40 delta, 30, selling 35, 25, and basically there's a difference of 10 in each one, just to see how far out of the money you want to go. So this is closer to the money, delta 40, and if we go back to the option chain, delta 40 right now would be about a 138 or 137. So if we look at the chart, we'd be selling the 138 or 137, and that's pretty close to the money. So when we look at the options backtester, we can see that over the past 3 years, that 31 wins, 8 losses, total return was $330. Now this is a backtest showing just one spread. Obviously, you can do more. I've put in some kind of generic commissions. I typically like to sell somewhere in the 30, around the 30, which means there's approximately a 30% chance that this expires in the money, which also means there's about a 70% chance it expires out of the money. And that's really what the goal is when we sell a put spread. So if I take a look at the sell the 30 by the 20, the 30 delta, 20 delta, and I can click on this and it can give me a little bit more information. And so one thing that's interesting here, it'll tell you the average win would be $36 per spread. The average loss is $144. And this is pretty common for option selling is you're going to have a lot more winners. In this case, almost 90% winners, but the few losses that you have are going to be a little bit larger. So you never know when those losses are coming. So you really want to position size when you put these on. But ultimately, this is a pretty good strategy. The interesting part is if we look at the difference between the 30 and the 35, we had less winners, and the percent of return was actually slightly greater. And if we look at this, and really what that means is the loss was actually less. And I think that's partly due to the fact that it's closer to the money. So there's actually slightly less risk per spread because you're getting more credit. So your max loss is less per spread. We'd have to go into the details, and you actually can do that if you, with this particular software, you can download all the trades that the software put on over those 3 years. So you can go back and see, okay, where were the losses? That's a pretty neat feature here of the CML Viz Trade Machine Pro. That's the name of this software. So I'm looking at somewhere between a delta 30 and a delta 35 put spread on the NASDAQ with about 3 strikes. So let's go into the option chain again and kind of just see what that would look like. So here we have the 136 with the delta 32. So it's right between the 30, 35, and we would sell, again, 3 strikes would put us at the 1, 2, 3, would sell the 133. So one way I like to set it up is I switch this to, okay, we're going to sell the 136 because that's the delta we want. And I'm going to sell a 1 month 3 strike vertical. And if I sell the 136 right now, I can get about 60 cents for that. So again, I think, taking advantage of the sell-off and selling that 136 put spread, which actually gives us some support in this area as well, I think it's going to be a decent trade. So again, looking to sell the 136, buy the 133 for about 60 cents or so, and I'm going to see about putting that on tomorrow. So if you have any questions, feel free to put them in the comment section. Also, again, I'm going to put a link to the software where you guys can check that out yourself. There's obviously some other strategies here. You can buy put spreads, buy call spreads. You can, kind of do different things. There's a lot of stuff around earnings too. They really do a great job of helping you learn the software with different examples. So hopefully you guys will check that out. And that's all I got for today. We'll see you at the next video.